Good day, everyone. This is Onion. Today I'm going to go over Sundial growers, some of the charts on that with you. I'm going to show you how this has become a really, really nice day trade, how you can play the day trade with safety, and also if you bought in a little bit too high and you're holding your shares and you're just watching them go sideways, I'm going to show you some methods on how to get those shares to make you money while you wait, for a correction that you believe is going to happen. Now, this isn't investment advice at all. I know I have a lot of newer traders that follow me or that watch these videos, and these are very common practices, but I'm just showing you different options that are available, to you as a day trader or even as a long-term investor. These are options to keep cash coming into the account all the time and, to play with a little bit of safety. I apologize about the videos. I'm good at trading, but I'm not very good at creating these videos. I apologize if the sound's off and everything looks a little screwy.
Okay, so here's the chart for Sundial, and we'll go back to February, the beginning of February here, and as you can see, here's the spike, right? There was no reason for it to spike this high. So uh, let's say beginning of February, we see this, it's alert, it's in our alerts, it's all over social media, people are pumping this thing. So you're going to take a look at Sundial. The first thing you're going to look at is where has the share price been? And as you can see, it has been under $1 for quite a while. There was really no news with Sundial. The volume was low. It wasn't doing anything. It was going sideways, and all of a sudden it jumped up. So, second thing you do, why did it jump up, right? Is it market chatter is it pump and dump? What is the reason? And right away, if you do simple research, there's no reason for it to go to $4, right? So I have a formula that shows me a good midpoint, but we'll just say $2 here. Not the technicals, sorry. Here are the options here. Um, yeah, we'll use $2 as a center point. Okay, so what I did is when it was spiked up, in $3 range, the $2 put options were actually fairly cheap. They're a lot cheaper than they are now. So basically, a put option. If you don't know what a put option is, or option contracts, you're going to have to learn a little bit about this to understand. But I'm going to try to explain it as simple as possible. A put option, if you buy one contract, let's say it expires March 5th, next Friday. They always expire on a Friday. I can buy one contract for $70 because this is per share price, and there's 100 shares per contract, so it would cost me $70, but that gives me the right to sell 100 shares anytime before before March 5th at 4 p.m. I can sell it 100 shares at $2 anytime. So how you can use this in your favor is when the price spiked up. I looked at the $2 put options, and I bought one for March 19th. So right now they're 80 cents, and the only reason they're 80 cents is because the share price has dropped. But when the share price was in around the $3.50 mark, these were pretty cheap, and they were 5 weeks ahead at the time when I bought them, and I got them for a really really good deal. So basically now that gave me the right. I bought quite a few, but we'll just say one contract. That gave me the right to buy or to sell 100 shares of SNDL anytime I want before March 19th, right? So now, every day I can open up in a day. I close my position every day. Every day trader does. It's a wise move because a lot of times these companies will gap down the next day and then you're stuck, right? Unless you have a put option. But um, in the mornings I buy, right? So for example, Friday, you buy at $1.30, you let it go up to $1.50. Like you buy $1.30 in pre-market, goes up to $1.50 during the day, you scalp it, you make 20 cents profit, and then you try to do it over and over and over again. You either do that to accumulate shares in the company or to accumulate money, right? That's the whole point of trading. This is what stock trading is. It's not just throwing your money in and hoping that the stock's gonna go up. You got to make money by making your shares and your money work for you. So what I do here is every day I flip the company. But let's say Monday morning comes, price drops down to $1.10. I think, wow, this is great. I buy a whole bunch of shares, enough that my put contracts will cover, and then the price reverses and it starts dropping and dropping and dropping, and it never goes over $1 again. So you know what? I made a mistake, but I have that safety net. I can sell my shares for $2 anytime I want. So if you make a mistake, you have the safety net. If you follow RSI and momentum properly, you can day trade this thing day after day after day with a $2 safety. So sure, some people, I have a lot of friends that trade, and you know, some of them like to do it this way, and some say it's a waste of money. And it is going to cost you money, right? It's going to cost you, like, if you know, if you wanted to do this method, you know, you could use $1.50 strikes, you could do whatever, they'd be cheaper. But if you wanted to do this and have the right to sell until April 1st, it's going to cost you $90 to have that right on 100 shares. But the question you have to ask yourself is, how many times can you flip this stock before April 1st? If you can make more than $90, then you know you have that safety net, and the safety net is worth it. To me, it's worth it. You know, I can sleep at night all weekend. I don't worry about this. I'm cashed out. I know I can always get, and if I am holding, I know I can always get $2 for my shares. So now I'm going to go over how you can, if you're bag holding, how you can make money with your shares. Okay, so now we're going to say the opposite was true. The price spiked up, but you were patient still. You waited a few days, but you got caught in this bull trap here, and which is fine. You know, it's not a bad thing. People get caught in bull traps. I've done it before. You know, any trader that's had experience has been in a bull trap before. So you know, it's not the end of the world. Don't beat yourself up. It happens to everyone. But let's say now you say you do not want to accept anything less than $2.50 for your shares, which is, you know, okay, fine, that's fine. That's your exit point, right? So what you can do is you can look at selling to open call options. And basically what that is you're going to sell somebody the right to buy your shares for $2.50. So how that can make you money here is this February 20th, it's Saturday, so this should be off. This will be gone on Monday. So we're looking at the March 5th week, right? So the following week on March 12th, expiry at 4 p.m., you can sell somebody the option to buy your shares for $2.50 before that date. Okay, so if you don't think the price is going to go up to $2.50 by then, or even if you do and you're happy to get 250, you can make $50 off your contracts. Okay, so basically you're selling your 1,000 shares in the form of 10 contracts, and you get $50. Now, how can that benefit you? If the share price does not go up to $2.50 by March 12th, the contract will expire worthless. You keep the $50. Now, if the price spikes past $2.50, the owner will most likely exercise the contract and take your shares. So downfall, you cannot get more than $2.50 for this. But the upside is you can sell these contracts. You can sell this right week after week after week until that strike price gets closer to, or until the share price gets closer to your, you know, preferred exit point, right? So if you play this right, like, you know, you can make a lot of, you know, quick money. If you want to make quick money, you just take you know, you do your expiry for July 16th. You know, they're offering 40 cents. That's $40 per contract. So you could sell, you know, your 10 contracts for $400 right here, you know, and make $400. But now you have to hold your 1,000 shares until July 16th. So do you believe the share price will hit 250 by July 16th? Well, if it doesn't, you just made yourself $400. If it does, you made yourself $400 plus 250 per share. So that is a very, very, very good way to earn money while your shares are just sitting there and going sideways and doing absolutely nothing.
So I hope those ideas help you a little bit. Those are just two ways, you know, how to make money day trading and keep money coming into the account. I have nothing against Sundial. I've done a fundamental analysis on it in another video on my YouTube channel. You know, you can look at price targets and that. I think Sundial will go to there if you like. And I've also been covering this for 2 weeks. I'm doing daily videos, tracking the price movement and showing it, and it's pretty much been correct every day. So this is a textbook day trade right now. You know, it has high volume, it's a low share price, and it offers options. So you know, it's a trending stock right now. So it's definitely, you know, very easy when you follow the RSI and the momentum properly. You can get in and out pretty easy and make this a nice day trade. And with those you know, methods I showed you, you can, you know, do it with a certain amount of safety as well. So you know, don't forget, bears, bulls, they always fight against each other. They're always worried about each other, but they always seem to forget about the lion in the background waiting. Be that lion. Take what you want when you want. Good luck to everyone. Have a wonderful day.